So we're going to look at a FTX update and see what the infamous Mr. Sam Bankman-Fried is currently up to. A criminal investigation is currently underway in the Bahamas. FTX moved its headquarters from Hong Kong to the Bahamas last year, with former CEO Sam Bankman-Fried hailing it as one of the new places to set up a comprehensive framework for crypto at the time. On Sunday, the authorities in the Bahamas said they were investigating potential criminal misconduct surrounding the company's implosion. In light of the collapse of FTX globally and the provisional liquidation of FTX Digital Markets Limited, a team of financial investigators from the Financial Crimes Investigation Branch are working closely with the Bahamas Securities Commission to investigate if any criminal misconduct occurred. The Royal Bahamas Police Force said in a statement, "It's not clear which particular aspect of the swift collapse of FTX authorities are investigating." Bankman-Fried, the 30-year-old founder of the exchange, was one of the faces of the crypto industry, amassing a fortune once totaling $25 billion. That has since vanished. He had been viewed as the crypto world's White Knight, stepping in previously to rescue companies struggling after the collapse of the Terra USD stablecoin in May. FTX, backed by elite investors like BlackRock and Sequoia Capital, rapidly became one of the biggest crypto exchanges in the world. Its collapse was preceded by the decision to lend billions of dollars worth of customer assets to fund risky bets by Alameda, Bankman-Fried's crypto hedge fund, the Wall Street Journal reported on Thursday. The Bahamas probe came a day after the bankrupt exchange said it was launching an investigation of its own. On Saturday, FTX said it was looking into whether crypto assets were stolen. Crypto risk management firm Elliptic said $473 million in crypto assets appear to have been nabbed from FTX. FTX General Counsel Ryan Miller said Saturday the company initiated precautionary steps on Friday and moved all its digital assets offline. The process was expedited Friday evening to mitigate damage upon observing unauthorized transactions. Miller said that FTX was investigating abnormalities regarding movements in crypto wallets related to consolidation of FTX balances across exchanges. The facts are still unclear and the company will share more information as soon as possible, he added. As scrutiny of big players in the crypto world increases, Singapore-based Crypto.com admitted to accidentally sending more than $400 million in ETH to the wrong account. CEO Chris Marzinska said on Sunday that the transfer of 320,000 ETH was made 3 weeks ago to a corporate account at competing exchange Gate.io instead to one of its offline or cold wallets. Though the funds were recovered, users were withdrawing their funds from the platform, fearing it could collapse like FTX. We have since strengthened our process and systems to better manage these internal transfers, Marszalek tweeted Sunday. The platform's native token has fallen over 20% in the last 24 hours, according to CoinDesk. Marszalek said Monday that his firm has acted as a responsible, regulated player since inception and will soon prove all the naysayers wrong with our actions. Crypto.com has 70 million people on its platform globally, and its business model is completely different from FTX. We never took any third-party risks. We do not run a hedge fund. We do not trade customers' assets, he said. Marszalek said his firm will publish an audited report showing its reserves soon. At the conference in Bali, Binance boss CZ signalled that regulating the industry won't be easy. Authorities' natural response is to borrow regulations from the traditional banking systems, but crypto exchanges operate very, very differently from banks, he said. It is very, very normal for a bank to move user assets for investments and try to make returns, he explained. If a crypto exchange operates that way, it is almost guaranteed to go down, adding that the industry collectively had a role to play in protecting consumers.